Following that PPI number, a little bit of a hotter read on inflation. Rick Santelli joining us now from Chicago with the bond report. But again, I guess I'm a little bit vexed. That's a $1,000 word, Rick, about why we're not seeing a bigger move in bonds or stocks.
Yeah, well, those are my decos. PPI hot, claims tame, and the next one, limited Treasury reaction to the data. And I could say limited market reaction. You've said basically the same thing. But guess what? The market has a big opinion here, folks. I'll show you. Here's an intraday of 2s and 10s on the same chart. Obviously, we could see what happened at 8:30 Eastern. Hot PPI comes out, and the rates moved higher, no matter what part of the curve you looked at. And right now, 2s and 10s are each up about a half a dozen basis points, basically negating what they gained on the downside yesterday. But here's why the market's got an opinion. Let's go back on all the rest of the charts to a couple of sessions before Jobs Friday. And it was a horrible report, right? All right, let's look at 2s and 10s. Well, they had a big drop on Jobs Friday. They didn't recoup nearly as much of that drop, which means in the market's eyes, the drop in jobs numbers, the negative revisions in the job numbers, the poor payroll number in the jobs report for July, indeed, well, it's more important to the market than the inflation side. Almost the exact opposite of what the Fed speak has been. And if you look at the dollar index, and this is key, same thing. The response, well, the dollar really slid after the weak jobs report, but it didn't make a comeback. Maybe the best chart of all. Fed Fund futures. I will tell you this. If Fed Fund futures 3 to 5 days, 3 to 5 sessions in front of a meeting are pricing 55% or higher, the Fed's going to go along with whatever the market says. They do not like to surprise the market. They like to talk it around if they don't agree with it, but wherever it's at a few sessions before is what they're going to do. And Fed Fund futures is clear at this point. The big run-up in Fed funds on Jobs Friday means more easing. The fact that it only curled down a little bit today means it didn't take nearly all of it back. A market is looking for a rate cut in September, and I don't see any way around it unless the data between now and then does a lot more to affect the market, and especially the charts of the market products that I've just shown.